Good morning, everybody, and welcome to the Siler Wealth Management video blog today, Thursday, May 26th, and I hope everybody's having a great day. And, the market has had 2 great days in a row. Now, keep in mind, markets or stocks do not go straight up, and they do not go straight down. The market has pretty much been on the defensive over the last 3 or 4 weeks, and just kind of trickling downward, no major sell-offs. In fact, volatility seems to have waned a little bit. But what we're seeing here is that, the market's gone down for 3, 4 weeks in a row. You needed a spike up. Little bits of not bad news got things going. Now, across the board, all sectors were working, really. It was a broad-based rally. That's good to see. Volume is not that compelling now. Could be we're going into a holiday weekend, yes, but quite frankly, when the volume's not quite there, it tells me that this rally is unsustainable. So we are at the top of the trading range. We're getting close. We're within 100 points or so on the Dow, about 10, 20, 30 points on the S&P 500. So we're within a couple of percent of where it usually stalls out. I take these opportunities, and there's some things I do want to buy, and I'll talk about that in a minute, but oftentimes if you wanted to get out and you missed it, and then you saw the market pull back, so when it gets back to that level, I want to get out, you're probably close to where you could start putting some money elsewhere, get it out of some equities, get them out of some things you have profits in, put in some more conservative type investments for now, okay? However, I talked about sectors in my last broadcast on Tuesday, and sectors are so critically important. Really, they are probably the most important part of a portfolio if you have stocks or equities or mutual funds, because broad-based funds, markets like this, everybody went up, everything went up. But what outperformed? So when you look at what outperformed, the banks absolutely killed it yesterday. And the last 2 days have been outstanding for the banks. And why is that? Because the banks do extremely well in a rising interest rate environment. And now what is the mood on Wall Street? Well, the Fed at first, you thought, yes, they're definitely going to raise in June. No, it's only 5% chance. Now it's jumped to 24% chance. So rising interest rate environments, great for banks. That's where banks make their money. So we're long and we own a lot of financials, and we're probably a little overweighted, but that's okay. I'm okay when you're overweighted things that are working. It's when you're overweighted things that aren't working. Believe me, everybody's been there before. I talked about healthcare, more specifically, not just broad-based healthcare, drugs and biotech. I almost pulled the trigger yesterday, but I wasn't quite sure. I'm thinking, all right, they moved up a couple of days, but this subgroup, on a part of a very large group, healthcare, subgroup, biotech, and or drugs, they really had been underperforming. They've been really bad. In fact, the biotechs have been absolutely horrendous. It's highly unlikely that horrendous performance will continue. Okay, even though the market's going down, still investors need to find a place to put their money. And the charts are telling me that biotechs and drug stocks are going to do well. So, I've got some ideas. I'm buying a couple exchange traded funds that, I haven't done it yet. I made my allocation list for my clients yesterday, didn't pull the trigger. I will likely pull the trigger today. I just want to see where they start out, where they start trading. Although I never like to do any transactions, buy or sells on the open. That's just my rule of thumb, because between 9:30 and 10, too much craziness can happen, and you can get whipsawed one way or the other. So that, when it comes to trading, that's important. Now, fixed income. There's a pretty interesting part of fixed income that I think are going to do really well also in a rising interest rate environment. And it's conservative, and it's floating rate or senior secured notes. Senior secured notes are basically, treat them like a bond, okay? But let me give you an example. When General Motors went bankrupt, okay, and they went bankrupt, I don't know how many years ago now, everybody on that deal, the shareholders, because the stock went to zero and all those shareholders got the screws put to them, all their bonds basically got pennies on a dollar. You know who made out? Senior secured notes, because they lent money to General Motors, but for that, they owned property, equipment, facilities, all that. So they owned it. So the senior secured notes got about 90% of their money back. So that's where you want to be. Senior secured notes are considered to be at the top of the capital stack, when stocks are at the bottom, because the first person to get screwed is the shareholder. Okay, and it goes up from there as far as capital stack. So senior secured notes are a pretty decent place to be, and oftentimes these funds are leveraged, meaning they borrow money to buy more of them to enhance the yield. It's complicated, but it's not that complicated. So if you want to talk about it, anyway, yields on senior secured notes and floating rate funds, you can get 4.5, 4.75, 4.25 on your money, which is a lot better than a bank. And I've got a plethora of them that I use. So get a hold of me if you're looking for something that's kind of almost a CD equivalent, and with very little volatility. And in this market, I think there's upside too, because they do better in a rising interest rate environment. So a couple ideas. I've got more, and I'm going to start sharing more ideas with you, but let's do this. I want to draw. I told you guys I would do 4 cruises this week. I did 2 last 2 days ago on Tuesday. I'm going to do 2 more. Cruise for 2 to the Bahamas, absolutely free. All you have to do is pay the port tax. That's not me. That's the United States government. I don't know. They got to make their peace everywhere. But anyway, it's a nice little getaway. It's a nice little 2-day getaway. It goes out of Palm Beach. All right. First winner is Julie S. Julie S., you are a winner. Congratulations. I'll contact you, Julie S. And let's go to the next winner. Actually, the Green Bowl. If you share my video, you get 2 entries. If you like my video, you get 1 entry. So I'll draw them every week. And at some point, the Paradise Cruise Line is going to go away as far as giving me cruises. So let's try and just blow them out here in the next few months. How about that? All right. Let's go with Terry B. Terry B. You're a winner. So congratulations, Terry B. Julie S. I'll be contacting you both. You guys have won cruises for 2 to the Bahamas. All you have to do is pay the port tax, and it's a nice little jaunt. So in the meantime, hope everybody has had a great week thus far. Got a holiday weekend. I encourage everybody to be careful. Weather should be okay. Sunday's iffy, but should be all right. Anyway, I'm Lee Seiler. Check out my website. We got resources out the wazoo on that website. I mean, the articles, there's presentations on there, all kinds of great stuff. I know people are using it because they're telling me, wow, this was great. I saw this article. That's awesome. And also my Facebook has some neat articles coming out 3 days a week as well. I do this Monday, Wednesday, Friday. And interesting pieces, whether about trusts or healthcare or whatever. So, more financial planning side stuff. But I'm Lee Seiler. I'm the president, chief bottle washer here at Seiler Wealth Management. Thanks for joining me. If you have any questions, get a hold of us. In the meantime, have a great day.